There we go. Man, what a day. Okay. Man, I'm just hanging out. Soy Boy said he wouldn't mind coming on and talking to us a little bit. He does a lot of charting sessions within the King Capper Discord. Always active. Definitely one of the mods. The guys better watch out in King Cap. So, uh, but yeah, it's really cool to him to come on and hang out for a little bit. Busy man. Soy Boy, how long you been running that Discord now, or been doing that? When y'all start it?
Yeah, I started it. I mean, I founded it with Coach pretty much.
Yeah.
So kind of way back in what is it, August, September. And then we kind of found that together, and then he brought in all his guys as the head traders and some people he knew. And yeah, so we've run it since then. Just kind of mostly doing education content for the most part, since I don't really do alerts.
Yeah. I was for the longest time, I was confused who the hell you were. This guy just pops out of nowhere talking like he knows everything.
Yeah.
It took me forever to figure that out.
Yeah, no, it makes sense. I mean, obviously, most people join because they want the alerts and learn how to trade.
Yeah.
And since the head traders and they do all that stuff that people are looking for, I'm kind of in the background for the most part. So I pretty much, with regards to the Discord, do a lot of the the management stuff, and then I do some of the coding, set the Discord up, make sure all the permissions are set, do the community management, that kind of thing. And I'll probably be getting more involved again on the business side of things with them. I'm just trying to mad busy, so it's tough, and they got a lot of stuff going on now, especially with the trend. Mr. Trend Watch is a huge ad.
Dude, what a monster.
Yeah, that was a huge ad because the thing is that we'll kind of go into a little bit, but there's a lot of different types of trading styles, right? And then you'll see a lot of furus and kind of the modern age traders. They can definitely trade and they can make money. But an issue is you'll run into a lot of times is they're just kind of strictly mechanical traders. So what that means is they have a system they use, like a very defined system that they either found themselves or they picked up, and they really only trade using that. And you can be successful for quite a while doing that, but you'll kind of notice that a lot of those furus eventually kind of drop off, just kind of over time, like maybe 2 years, 1 year, 3 years, or whatever. Mostly because they find out that their system they have set up just kind of stops working. And because they were such a mechanical trader and they didn't really fully understand everything behind, like why the market's running, like why their indicators are doing what they are, they can't really, oh God. They can't really adapt how the market changes. So
yo, Bubna, shut the fuck up.
you just you can well, yeah, whatever. Just boot them if we want. You'll see that those guys just can't adapt, right? So Mr. Trendwatch is one of the few guys where he has his own system, but he has such a strong understanding of how the markets work and how his system actually works and why it works, that it doesn't really matter what kind of environment it's in or et cetera, like what's going on. He can be successful no matter what. So that's why he's so important to the Discord, honestly, right now, because our guys, our head traders, they're really good traders. They're learning, but to have someone that understands, frankly, just price action and all that, and the kind of the intricacies of it, is an enormous ad that you're not going to get really anywhere else.
Dude, yeah, I'm so glad you said that, because I was kind of noticing that for the longest time, that a lot of these people that are posting, specific strategies, and a lot of it came from boot camp, right? So like each of the head traders that were in our camp, each one of them was kind of well known for a certain type of strategy. Stock Sniper, Money Manager, these guys, like, they don't really deviate too much, or at least they didn't then. And I'm hoping that Mr. Trendwatch on there, that everybody is just taken off to the next level. And I mean, I look at this analysis, and I've been doing macro stuff for about 15 years and charting and all that stuff. And even lately, I've had to change my entire strategy based on the market we're in. So that's a badass ad, honestly. I'm really excited for y'all. Well, let's see, guys. It's about 5, 6 after. We got a few people in here. Y'all feel free to chat. Like, just throw some questions or whatever in the chat as we go. I think I'm just gonna kind of chill and hang out and do some charting. But I think let's see. Soy boy, do you have any tickers in mind that you've been watching today at all, man? Oh, my bad. Yeah, sorry. This asshole was making crazy noises.
I would
There
just
you
boot him.
Yeah. Once I figured out who it is, I already got one of them.
Oh, it's Bubness.
Oh, is that what it was?
Yeah.
Hey, you better watch it, buddy. Don't ruin it for everybody. Oh, and he's gone. Look at that.
See, yeah, there's been a few I've been watching. So
I'm gonna see if I can let you.
All right, cool.
Yeah,
I can share my screen. If you guys want, I mean, I could definitely chart. I don't want to, you know, if you plan to chart, I don't want to just jack
you're
that
solid.
You, but,
not a problem. I mean, I'm going to be on here a while. I'm just kind of looking at some different charts, and I'd like to see maybe basically like, break it down for some newer people that don't have as well of an advanced understanding. Maybe kind of like, where do you begin when you're looking at a chart? What time frame, and then what are you looking for beyond that?
Yeah, sure thing. So, so I guess the question is, I think most people here that you have are alumni, right? So you guys kind of, for the most part, all right. So most people here are kind of looking at charts to some extent already. The first thing I would say is regards to time frame. I mean, you gotta understand that when you look at a chart, you're essentially you're getting visualized data points, right? That's just thrown onto something that you can see graphically. Because you could pull this stuff into Excel and just have a pile of numbers with dates, price, close price, open price, etc. And it's the same data you're going to get on a chart. And it's kind of important to understand that because, if anyone runs their own business or that sort of thing, or, you can just pretend or imagine you run your own business. Say you even like selling lemonade or something, right? You think about like, how would I guess how much lemonade I need to make to meet demand going forwards? And you would essentially, take a look at like how much you've sold in the past few weeks or something. Take an average of that as like a very basic example and use that going forward to say, all right, I usually sell about 10 lemonades a day. I'm going to have at least 10 prepped every day. And that kind of like thought process analysis is the same kind of thing you're doing with charting, where you're getting all this old price action. And let me turn off annotations for people here. So let's see. I clear these annotations. All right. And what you're really getting is, you're just seeing price, you're seeing the time frame that the price is happening, you're seeing volume, right? So that's the three pieces of the data that everything is based off of with regards to your indicators. And what you're seeing on a chart is just all price at certain times and how much volume is going at that price, right? At that time. So just understanding that, pretty important because you want to know what you're looking at, right? So when we look at a chart, the first thing that people are going to tell you to do is you want to look at support resistance, obviously is the most important thing. And the concept behind support resistance is you're trying to figure out essentially, at what point is the price going to stay at a certain range because of certain factors. And everyone knows that, when a stock goes up, it's because there's more people that want to buy a stock than there are sellers. So, you have 10 people that want to buy a stock, there's only 5 people selling it at $10. Well, those 5 people selling at $10 can get bought out. And then the next people, say there's another 5 people selling at $12. Now the people that still want to buy the stock have to buy at $12. So that's how your price moves up, right? So that's in a nutshell what supply and demand is. And the first thing you want to do in a chart is you want to go, pretty far back to whatever relevant time frame you have, right? So I'll pull up, we can use Facebook. It's totally fine. I'll clear my drawings for now. And you want to see, all the data that's relevant to what you're looking at right now, right? Because as much data you can have is going to give you the best advantage you can. And the whole goal of training is to give yourself an edge. It's not the casino, but it's almost like the idea of, people like counting cards and they play blackjack, because what they're doing is they're playing a probability game, right? So they're essentially saying, all right, these are the cards I have in my hand. This is what I think is in the deck. I have a 60% chance of winning this hand. And over time, because I'm winning 60%, or I know my stats and I'm only betting heavy on the 60% of win rate chances or the win rate hands, you're going to make money over time. You want to use all the data that's relevant to you as possible, right? So people often make the mistake of only looking at like the last week or the last 5 days or something of data. When you have, a year's worth of data that's relevant to your price range, you should use it. You know what I mean? Because it's still relevant, and you can use it to identify patterns that especially support resistance, which is the most important thing. So, as like a real base example, Facebook, you want to draw support resistance because it's going to give you an idea of where you think the price is going to stay between, right? So when you draw a resistance line, you're essentially saying that it's pretty tough for price to move past this price. So you can kind of expect that when price hits it, it should bounce back down theoretically. And same thing goes for support, right? So once you chart those two out, you're going to have a range where the price is going to move between. So that way you can narrow down your expectations of what you think is going to happen with the price. And right off the bat, that's give you kind of a slight edge, right? Because someone that doesn't do that, they're just going to look at the price and just going to say, all right, I think it's going to go up. But they have no idea how far it's going to go up. They don't know when it might stop going up. And they don't know how far it might go down, if it, or how much further up it goes if it passes a certain level. They don't have any of the information if they didn't do support resistance. So that's how you give yourself like a very starting edge, which is why everyone says start off with just charting support and resistance. So to do that, I mean, think about the concept of what resistance is, for example, right? Resistance is where you have a lot of people selling the stock, and oftentimes it's where there's more sellers at that price than there are buyers. And that's why the price tends to not pass that level and bounce back down, because there's just too many sellers. So it's relatively easy to find. It's tough to determine which ones are better than others, but in a nutshell, you kind of just want to look for where your candles have the most touches. So Facebook honestly is a little less clear. You might want to run zones with it, if it's a little easier conceptually. So a zone is the same thing as support resistance level, where you're just saying, all right, between, like 190 and 198, that's where you tend to get a lot of sellers, right? So the price has a lot of, the price tends to not pass through this range of 190, 198 very easily, for example. Some stocks like to use a very specific level sometimes. It depends on the stock. Like a lot of the older ones, for example, like CVS, kind of like boomer stocks, for example, like to respect, a specific price more so than a zone. So CVS obviously, had a lot of action going here at 100, where it just kind of bounced off 100 every time it got near it, it rejected it, or here it consolidated against it and had a really tough time on it. Whereas, I was looking before at Facebook, it's not as specific, right? It's a little messier. You can see obviously 200 gets a lot of action, right? But it's not like you see a ton of, candles bouncing off. You see a lot of wicks go through it as well. So this is where you might conceptually might be easier for you to use a zone, or if you like just kind of your single line of resistance, that's fine too. But just understand the concept is that you want to map out where you think there's a lot of buyers. So where you think the price will have a tough time passing down past, as well as going up past, because that's where you're going to set your trading range in to give yourself that edge there. Does that kind of make sense for everyone? I don't know if I'm going too basic or not, but because I'm not sure what everyone's levels are at right now. But that's like the most important thing. All right. So yeah, and obviously feel free to use questions. So wicks or bodies? Okay. Yeah, that's a really good question. So it depends, right? So everything, you're gonna hear this a lot, because the more I study charting and everything, the more I realize that everything is just kind of how you interpret it, right? And as long as you interpret a certain way, if it works, it works. So I tend to use bodies. Sometimes wicks are fine too, right? The way you can interpret it is, for example, let's look at Facebook 200 here, right? So if you look at Facebook 200, you have a few wicks here, right? Where it kind of bounces off of it. It passes it passes barely through. We can just kind of ignore that to like 250 cents or something, right? But you see the wicks tap 200 right here, like this candle and this candle. And that's a pretty good sign, because that essentially means is that there were so many sellers there, the price got pushed way back down, which is why you have the long wick. Now with the body, that's fine too, because what the body is saying here is that you can see right here. This is also saying that, hey, you still have so many sellers at this level, right above 200 or at 200, that it can't push past 200, right? Usually wicks tend to indicate a stronger presence of either sellers or buyers, like whichever. If you're looking at support, you're looking at buyers. Resistance, you're looking at sellers, obviously. Usually a longer wick suggests that it's just like a stronger resistance or a stronger support. You see a really long wick, because that means it just like the price got blown way back off of it as soon as it tried to attempt it. um, the body can be the same thing. It just usually means that there might not be as much resistance going up closer to that price, but it still can't pass the price, right? So it's like scenario dependent. You know what I mean? Like if you saw Facebook here, instead of having these bodies end here, it had like a ton of wicks coming down, for example. Maybe the SPY intraday have an example here. Maybe I'm trying to think of a good one. Oh, yeah, I know one there. Let's do that. So vet right here, not a great example. But it's really depending on how you want to interpret it in this scenario, right? Because you can see like these wicks, they are pretty long wicks and they're slightly pulling up. Over here, you can see long wicks and the bodies are right here touching like 2340. The important thing is that you stay consistent with it, right? So like if you're trying to trade vet, for example, right now, right? You don't want to be switching your trading, like your entry levels, from, say, you looking at this, you're like, oh, okay, I see a couple wicks here, I'm going to enter the next time I see this wick. You want make sure you stay consistent with it. You don't want to say, all right, there's a body here, I'm going to enter this time. Like you just need to have a plan with it. But you know it depends on your trading style. Sometimes people put a lot of stock into wicks, especially maybe if it's like intraday trading, for example, or it's like a really strong support resistance level. You can put a lot more weight on wicks than bodies, so it's up to you. Um, yeah, but I tend to use bodies too. I think unless I see a pattern where you see a bunch of wicks touching, like if, for example, here I saw all these wicks coming up to 24 and just wicking off of it, then I'd use 24, right? Because I know that every time it tries to touch 24, it's getting blown way back down. But it depends on your trading style for the most part. So hopefully that answers that question. So that's real rough and dirty support resistance. Always obviously feel free to ask any questions about that. I'd say the one thing I don't have too much experience with that I'm working on is using volume. So I don't use volume too much in my trading, honestly, but I've been working it a little bit in. The problem is that volume is such a kind of like a washed out. It's not washed out, but it's a very you don't get a lot of info just based off the volume bars. So some people use an indicator where they see the buyers versus the sellers, or like the buying volume versus selling volume, for example, and they get some good info off of that. Some people like to say, you want a lot of volume for a big move, and that kind of confirms it. Not always the case, but sometimes it is. So volume, I just don't have enough experience with to really speak on a bunch. But there are a lot of good books out there on volume if you want to get into that. So I know some people trade purely off of candles and volume and just kind of do like hardcore day trading and scalping off of that. Totally doable. There's a million ways to trade, you know what I mean? It's just if you can find a pattern that works for you, it works for you, right? It doesn't have to be quote unquote correct. It's just that there is generally a standard way to think about things that works more often than not. Oh yeah, I didn't realize is you're muted here. Let's see.
Oh, appreciate it, man. Yeah, I made you the host because I couldn't really figure out how to get individuals to share their screen without it. But no, if y'all have questions about volume, that's more my thing. I definitely trade with volume every single day. Um, Especially, when you're looking at continuation or trend reversal moments in the middle of the day. That's my favorite thing. And I can talk later about like the daily chart and looking at volume on that too. SPY is the perfect example right now. The volume just absolutely bottoming out, and the trend on the volume is just going down, down, down. So I'm looking for a big move after that's finished. But liquidity is kind of drying up in the market right now. It doesn't surprise me that the volume is shit. So, but yeah.
Yeah, I agree with you. I do look at volume on the macro level. So obviously, as you said with SPY, I mean, it is important to know like because it can kind of help you identify trends or confirm like big trends, and then also kind of just looking at this chop here. Yeah, the volume's been garbage, right? And then every rally we've had, the volume's been garbage too. So it's been pretty easy, like fade the rally every time because there's just nothing behind it really. It's just straight price, no volume. So
Exactly.
it just means like really low conviction moves, for example. But yeah, I mean, I've definitely been meaning to kind of look at that more intraday because I just, I haven't messed with it too much. So let's see. I bought SPY due to the bought puts on SPY decline in volume, the fact of seeing resistance at 416. So yeah, I mean, I would say, right now, Chris, like it's a tough call here with regards to calls or puts for a swing on SPY. It's really just chopping, and there's no good indication of what direction it's going to go. I don't want to say it's a coin flip. Maybe like you found something in there that's secret sauce. But here's the thing. You'll notice that you don't want like no volume on rallies, but rallies tend to have less volume than pullbacks, and that's just kind of like a general rule. Like when you look at the macro part of it, if you look at SPY rallies, you'll see that they always have much lower volume than actual pullbacks. So it is something to keep in mind. Like just because it is a low volume rally doesn't mean it can't continue. Me personally, I don't really see too much here. I I'm currently leaning towards we're going to get a little bit more of a bear market rally still, but
Oh yeah.
uh, it's it's a toss up.
I can tell you all from just from my experience, just on a macro level, the inflation numbers, still the current supply chain issues, the crypto market, all this has to do with each other. It's all relative. Um, and there's absolutely no reason to me personally for us to get a new bull market just yet. I am I am a bear at the moment, and I am fading the pops. So you can see on that big run up in the middle of his chart how the volume is just absolutely bottoming out on the run up. To me, that was a sign that there was going to be a trend reversal to the downside. That's a very simple way of looking at volume in this way. You see this volume just decreasing every single day, and then you get to the top of this trend. It hits that level that he's at the top of that curve, and then it dumps into you come back down to the 380s from 460. So on a macro level for me as a swing trader, that's one of the things that I'm looking at just to keep note of.
Yeah, man. I think overall we're in a bear market for sure. The only thing holding me back from a macro perspective with regards to like a full blown, I think we are in a bear market, but the only thing that's holding me back is that we're not actually in a recession yet. Like there's no severe unemployment and that kind of thing. So I feel like the market's just kind of like gonna putter around until that kind of thing happens. But we're definitely not in a bull market, so don't be fooled, guys.
So after you do your support and resistance zones on a ticker, what I'm guessing you're not going to trade the initial breakout when you're looking for a breakout. You're probably going to wait for confirmation after a big move out of a channel or a pattern that you're looking at. I'm assuming you're not trying to time the exact moment. Is that correct?
Yeah, it depends. I mean, sometimes if I have a plan in mind, like I see a specific pattern and I think something's going to happen, I might try and hop in a little earlier. To be honest, though, sometimes you get bit for that because you hop in too early with no confirmation, then obviously doesn't go your way.
Mhm.
But yeah, for the most part, I do wait for a confirmation of some sort a movement in the direction I want or some sort of reversal or bounce. Um, there's
As an
yeah.
example, could you pull up ticker SDPI and just show the daily on that? Um, so that's a pretty cool, to me, it's a pretty cool technical possible swing coming on this. And I'm curious of your thoughts on this play.
Oh man, I generally avoid playing these kind of charts. I just haven't studied them enough.
Yeah.
So this is essentially a chart that you'll see a lot of times on penny stocks, and especially anything that not necessarily meme play, but a lot of tickers that kind of have rapid pumps. You'll see this sort of thing like every time where they have
Mhm.
huge pumps, fade, kind of, and then if they're legit, more of a legit company, look, they won't like completely fade off, and they'll kind of have these repeated pumps back and forth and kind of slowly grind up. I will say it looks pretty good overall, because what you're having is this kind of trend, at least like you're getting higher lows, which is really good. I don't know what's going on back here.
Probably
Would be
some
my
sort of
only
news.
question. Yeah, so one thing I would actually look at here is something like the OBV, or the volume. Actually, I'll ditch one of my indicators. I don't trade these looking charts, so I could be way off, but let's take a look at it anyways.
Yeah,
So,
Steve, the question right here says, would that
oh, there we
daily
go.
SPY be a cup and handle or double bottom? Or am I just seeing what you want to see?
Um,
If we're looking at this ticker in particular, the one we were just looking at,
oh, I
you
pulled
got to
up
be
the
really careful with the smaller stocks like that, because they're so crazy. I mean, it's not like it doesn't have a longer history of a lot of volume regularly. So whenever I look at volume, like on the daily, you see these big, huge pops, like way back, in the beginning of this chart, and then right in the middle is a little one. Like it's the volume is just not regular. So this is, for me, I'm looking for a momentum shift in this. Um, it's more of a sentiment play, and the sector that they just so happen to be in. So it's not necessarily a healthy stock, but there are a lot of times they just beat on earnings, and they just had some really nice news this past month. So 70% increase in revenue, big time earnings beat. So I'm looking for a breakout, especially after the higher low and the technical patterns. And this $1.30 level is super important for this stock. And you can see the past whenever it broke it, what it did. So I'm hoping for a 25-cent move on this dollar stock. Um, it's just a matter of timing it. When can we see it happening and how? So anyway, go ahead, bud.
Yeah, no, this is an interesting one. Once again, I just haven't studied these type of ones often enough. So you guys can definitely play these type of things if you just, put in the work and just, um, figure out like how these kind of ones work. I've seen them before plenty of times. I just haven't really, never really deep dived into it.
Right.
Yeah.
Well, what's a ticker that you typically like to chart? I'd love to see you walk us through some patterns or something.
Yeah. So one actually nailed SPX earlier. So let's do this. Let me clear all my notes here. All right. So SPX I was watching earlier to get today, and this one was pretty good. So can honestly we can use the replay here. I was watching it about, where was I watching this thing? I was watching it about here. So what you're seeing here with SPX is I pulled it up kind of later in the day around like 2, honestly. So let's hurry up here. And what I can see immediately here is we have the inverse head and shoulders, kind of right off the bat, just looking at it. So what we're seeing here is this. So right off the bat, I have inverse head and shoulders. You can see the resistance here at about 41.35, or if you want to go a little higher, push it up to 41.40. With the next level resistance, you zoom out a little bit, being up here at about 41.60 or 41.70, give or take. And what I'm watching for here is, obviously I have inverse head and shoulders, but that doesn't mean, like you can see a pattern, you can see patterns everywhere, but it doesn't mean, that what's supposed to happen, the pattern's actually going to play out. So what I'm pretty much watching for as I see this is that I know that if inverse head and shoulders happens and it actually follows through, you're going to get a pretty nice move upwards, right? It just kind of, you have a better chance of getting a nice move upwards if it actually breaks than not. So I'm pretty much watching just to see what's going to happen with this and seeing if I can get a good entry. So as I'm watching it, I kind of enter about here, which is a little bit early, but what I'm seeing here is I also had some other indicators up. I think I was watching I just got rid of it. I was watching the RSI and MACD, whatever, we don't need those right now. But what I'm also seeing here is we're seeing a bull flag. And this is nice because you see the previous times that SPX here taps whatever this is, like 41.40, right? You're going to pull this line up a little, 41.40. Every time I tapped it, what it would do is it would just kind of bounce off within like 3 candles, right? And just get rejected pretty quickly. Now, there's a big difference here with the end of this inverse head and shoulders, where it's really trying to hold up. It's not getting rejected right away, right? And now you have this kind of bull flag looking thing. And once again, the bull flag it's not ever guaranteed that it's, actually like going to pull up, which is what it's supposed to. We're going to take the long end of the entry supply through 428. Not sure what you're asking there. But what I'm watching for, so I'm watching for this bull flag to give me a green candle and kind of move back up, and I'll zoom past it. But it does right here, right? So this green candle, I'm pretty confident this thing's actually going to start moving up. So you have 2 options, right? You can enter a little bit early, like over here on this green candle, and have a really tight stop loss because SPX options are kind of wild. You can enter it early with a tight stop loss, or you can enter it once it actually breaks past the neckline. And the neckline is a little subjective because you can see over here, like obviously these 2 blobs are higher. It kind of like goes a little bit lower, and now we're rejecting off of this right here. So it's really up to you to sort of determine, right, where you want to enter as like kind of the core resistance. I was pretty much looking at these most recent candles, right? And what I did was I entered on this green candle as soon as I saw it, entered that with a really tight stop. So if it broke back down, further down past the green candle, I'm way out, because every time it comes down to here at about 41.30 and it fails to hold it, this thing is a goner. So, you kind of enter that, and then it pushed through, which is great. So still holding. And at this point, I was at about, I think around here, or maybe this candle, I can't recall when. As soon as I hit plus 100% on something, I sell half right away. Because what that does is it takes all the risk off. So you cover your entry. That's just my straight up rule, no matter what. If I'm doing shares, if I'm doing options, whatever, if I hit plus 100% on anything, I sell half right away. Then the trade becomes free. So if I do something really dumb, at least I don't lose any money. And then you can, try and maximize it from there. But I like taking the risk off completely if I hit that opportunity. And what you're looking for right now, so once it breaks out of this bull flag, right, what's probably going to happen with this is it wants to retest the breakout level. And what that essentially means is it wants to see if the previous level that was really, hard resistance, if it can flip into support. And you're going to see this a lot in any stock that has a breakout. You'll see it a lot. I'll pull up more examples, but on a micro level, this is a really clean one, specifically on SPX. Sometimes it's not as clean with these kind of things, but it'll often kind of come back down and retest the prior resistance, consolidate on it maybe, and then if it can hold it, then it'll continue running up. If it can't, it'll just kind of rip straight back down. You need to start moving your stops as you go there. I don't use hotkeys. I don't do a lot of like scalping. So speed for me isn't super critical. Obviously with this play, like, I want to get in there kind of fast, but I'm on the 5-minute candles here. I like to wait for my candles to confirm and really finish out before entering. I don't want to enter just intra candle because the candle could just flip down, then all of a sudden you're out of luck, right? You want to wait for your whatever time frame you're trading on and pattern you're looking at. You want to like finish it out, right? So I don't want to just enter like halfway in the candle here. So sold half over here. Then we're essentially waiting to see what happens when it retests support, if it can bounce off or not. And then you see it come down, test, and this is good right here, right? So you actually saw back there. Wish I could go back a little bit, but you saw back here, there was actually kind of like this candle right here was like a red shooting star, like a hot rejection right here. But if you wait for the candle to finish out, it closes green. So you still have an opportunity to actually make more if you hold that. And then at this point, I'm out, because at this point it's coming back down. It's really retesting, and I don't want to take the risk of it actually breaking through, because with SPX specifically, the option price moves so fast that if it starts actually breaking down here, all my gains are gone, right? So, some tickers, especially if you're swinging, for example, and if you get into the play earlier, like not where I got in at about here, like if you get in earlier for whatever reason, like over here, you have plenty of room to play. You can wait for this to retest this level, and then if it comes down, they can get out, right? But with my play in particular, since I got in kind of late and it's SPX and you ran out of time in the day, I don't want any risk of bag holding this thing. So at this point, I'm all out at another plus 100% at around, frankly, this candle. As soon as I saw this thing forming, this rejection, it was game over for that. And yeah, so to make this play, I was essentially watching. I had the EMAs pulled up, which I've recently started using more, because I found it's really helped me out with trends. I have Ripsters just because, yeah. So I use Ripsters Cloud. It just looks nice. Since I don't use EMAs too much, some people, for example, like Mander and Dipka, and probably Alan, honestly, if he uses EMAs, they have a very hard system like the Golden Goose, where you want the price to touch the EMA first. I don't have a system built on EMAs just yet, and I really just use it as a way to help read the price action more so than anything. And I can go on a whole tangent about indicators and that sort of thing if you guys want. But I don't have a hard system set with this. So what I'll essentially be doing with it is I'm just using it to read what I think is going to happen. And it's just giving me additional information with regards to, will the trend continue? Will this price hold? And where do I think it might bounce off of, rather than I'm entering as soon as it touches this certain EMA level. And no worries, Alan. Did you want to share a screen or something? Ripsters Cloud. What's up?
Yeah, sorry, go ahead. Ripsters Clouds, I was just going to answer that question, but yes, it's on TradingView. It's an indicator on there.
It's you can see it over here. It's essentially forming like a cloud, or it just colors in between a couple of certain EMA lines. So like the EMA 8 and 9 is going to color in between those two and give you this ribbon here essentially. Some people do a lot of crazy things off of it. It just looks pretty. And for me, and then the colors help me identify. You can see when all these EMAs start fanning out, that kind of gives you indication that you have a lot of breakout going on, right? So when you see this kind of fully fan out, that's when you have a lot of momentum and you got some good price action going.
Can y'all see my TradingView right now?
We could, and now I can't.
I'm gonna see it. Man, I'm the worst with this crap. Honestly. There we go. What about now? Is that better? All right, cool. So I have all these different indicators on my stuff that I just keep hidden or don't keep hidden or whenever I want. And the same thing. These are Webull EMA clouds. I mean, to me, it's just cleaner. I have a hard time with the Ripsters particular let's call it indicator. That's just me. But let me see. Oh damn it, that's super quiet. There we go. Yeah, so I got too many fucking windows open. So same thing though. I mean, I trade off the EMAs a lot. Um, Today I did not, and lately what's been working better is using levels to chart with. So I can walk you all through my red box trade from today if you like. For the 5 minute. So it was like right in the middle of the day here. Yeah. Let me pull this chat window over here. Y'all can then just ask me questions or whatever. So I was waiting for this 740 breakout. I noticed when I zoomed out, and I think any chartist will tell you the higher the time frame, the more relevant the data. As soon as we broke down below it, I started noticing what Coach Dipko will call a battering ram setup. So we got this test here, right? So it broke down below that 740 mark, and then it came back up, test, 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 and then finally got our breakout. So I entered my trade here after confirming the break of that level, right? And as soon as I did, I'm currently up 22% on commons, and I took this for a ride up here for about 50, 60% just off that breakout alone. And then as soon as it hit my next level, I exited in full. I'm not fucking around in this market. Like Redbox is highly shorted, so it could get rug pulled at any time. But I saw the volume increasing at the bottom. That's what I wanted. So I'll do this. So you can see the trend in volume is starting to pick up all across these candles here. I don't know why it's extending like that. Yeah, so I'll put this here. You saw in that same time period, the volume was starting to pick up, right? I trade on Webull, Chris. It's just aesthetically pleasing. I was trained on Thinkorswim, and it needs to get with the times. Those people, I don't know what the hell they're doing, but so this is a lot cleaner for me. But yeah, so I was watching this volume tick up as a trend in the middle of the lunch hour. I hopped on live for no reason at all and said, "You know what, fuck it, we're gonna trade." And so I picked up some light size just to show people what I was looking at, and I just so happened to catch that these battering ram setups were everywhere on SPY, on this ticker. I mean, you can see it, like, boom, hit, and then eventually it wanted it. Like the relative volume was strong. And I think Redbox, if I'm not mistaken, it ended up being up like 27, 28% today. And so whenever I'm not feeling like I want to play SPY early in the week on Mondays and Tuesdays, I typically will play individual tickers. Let's see here. Okay, Steve. So the battering ram, exactly what I was just saying, right? So let me zoom out a little bit. I'm gonna get rid of some of this stuff. I don't like that. All right, so I got my 9 and my 21 EMA here. I'm gonna get rid of this volume profile for now. Just something super easy. Just keep it simple. My charting in the intraday has been super laid back, easy. Doesn't need to be too complicated for this particular strategy. I like what Soywood was saying. To be honest, for me personally, this has just been butter. I mean, super simple profits. I don't have to make it complicated. So a battering ram, you have that hard level. These pink lines are drawn from the daily chart over the course of history. I went back years to find these. And when I say that, I mean like, okay. All right. I did not realize these drawings were going to stay on it. So I'll look for, like, zoom out real far, right? And I'll find places where the stock either consolidated or had a hard time breaking down below in previous times. So back in December, like for instance, it's 930 to 938 level. That's going to be my price target for this particular trade. And so we have volume coming back into it, starting to tick back up. Right now, we broke the 200 daily moving average. Okay, we need to fix these colors. This is crazy. There we go. So the blue line is your 200-day average on the daily. And we actually broke it today. There we go. So that blue line is your 200-day moving average, right? So that means it's going to be extremely difficult to break that. The higher the average on these lines, the more difficult it's going to be used as resistance or support in a lot of ways. And you can back test this, you know, see it couldn't get over the 200 here, fell back down. Tried it again, fell back down. And now we're springing off of it. This black and yellow crossover is the 9 and 13 day moving average short-term golden cross. I also see that there is an inverse head and shoulders on the daily as well. So whenever I'm looking at this, I'll draw like a curve or something. Let's see. I'm just now getting used to this. So oh, it's the wrong one. That's why. Cool. Good job. So yeah, we had this little inverse head and shoulders setup coming. And then yeah, so we sprung off that 200-day moving average today. Now, this is what I was talking about earlier. Like, do you want to get in at the beginning of the breakout, or do you want to wait to see confirmation of the breakout, right? So just because you broke off that 200-day average, if I wasn't already in this trade, and I was today, but it wasn't because of the daily chart. I didn't notice this until after the market closed today. But typically I'll wait for the breakout above the 200. That's a really nice level. And then you'll see it come back down in the next day or so, maybe some consolidation, especially with this technical pattern. And then you want to see your rip from there if it gets validated. That's the main thing. As of right now, like Redbox is all over FinTwit with this huge conversation going on about its short interest or whatever. I don't like to gamble with those kind of stocks. So I'll play it technically for now, but if I'm gonna I got swung calls on this for tomorrow, but that's only because of how it moved today. Like, so now the rest of the internet and the trading community is going to catch up, and they're going to be like, "Oh shit, like this thing's rocking." And so I have a feeling that this is going to keep going. It might have some pullback in the morning tomorrow before it goes, but the volume is definitely ticking back up. Any questions so far? Okay, we'll just keep rocking here. Hey, Moneylytic, you wanna hang out and talk a little bit? Moneylytic is part of Apex. This guy's he's a really talented trader. You're welcome to chat for a minute if you want to, man. Oh, he said he had to step away. Okay, never mind. Okay. Yeah, let's keep rolling here. So beyond that, I wanted to also show you all this trend line that's been developing here. You'll notice that Redbox is really respecting it. And this is what I meant earlier by candle bodies when he was talking. When I draw my trends, like you'll notice it hits the corner of these candle bodies a lot, right here, here. So it's a beautiful trend line. You know, seriously respecting it. So there's just a lot of conviction here. The more levels of conviction you have, the more confidence you can have. And you know, if this is a swing trader's market, which is not, like I'm taking a big gamble by swinging this position. But this will be a pretty cool technical pattern, along with the higher lows, and then now we have our breakout above the 200-day moving average. The purple line is the 50. So keep in mind, if this fails, that's the next look down, dude. So if this ends up being you know, it just kind of falls out of its pattern, you have the 9-day average, the 13, and then the 50 is way down here. And that's also a strong level of support or resistance. You can see it here. It dropped down below it, came back up. We can go back in time and see the rest. So you can tell that the 50 and the purple and blue lines are definitely big moments. Even then back here, like in January, we had what was called a death cross. So you were already on a downtrend. You could have played this way earlier to the downside, but after that happened, you notice a period of consolidation and then an absolute monster knife. So the more time that goes on, you start to see the 50 starting to get closer and closer to the 200 again. That would be a huge moment because see what happened last time they did it. So obviously the stock did not move very well back in the day. So here we go. So the 50 sprung off the 200 average here. That's a full term golden cross back in October. And you can see after that happened, what happened? I mean, this stock just skyrocketed, right? Like there is truth to the whole golden and death cross conversation. I've been using that strategy for years and it works really well, you know. The more short term the cross, the more short term the expectation, I guess. So I'll see the 9 cross up above the 13 cross above the 50 above the 200, and so on. And the higher the number, the more conviction I have. Just, you know, kind of give you all an idea. So yeah, you had your death cross here or here. Vertical line, let's see, here. So ever since that day, you saw Redbox just flatline. And as soon as the 9 hit the 13 as resistance, it finally made it to move down, right? Yeah, regular moving averages, Steve. That's what I use for the daily chart. I use EMAs on the intraday. So let me go back to this trade from today real quick. I just want to kind of walk through it. I'm not used to using trading views. You'll forgive me if I suck at it, whatever. So you can see you can basically draw a trend line right across the bottom of that. So let's start here. I mean, look at that. So you can't get much cleaner. Like, try to find as many touches as you can. And you'll notice sometimes it dips below it, but for the most part, the more candle touches you get on a trend line, the better. And that includes my levels as well as my trend lines. So let's just see. Okay. So this initial rip, right? Man, I might need to switch over to Webull. I hate how gappy these candles are. So you use trading view all the time, right? Is there a way to decrease the gaps between the candles? It makes the pattern so shitty. Are you there? Oh, I got you. I unmuted you. Like Webull's charts, even though I like TradingView's software better, and I like that you can draw trend lines across the divergences in the bottom with the MACD and the volume and stuff. It's pretty cool. In the RSI, you can draw trend lines on it. Like that's always fun. But as far as like the space between the candles, you see how much space is in between them? It makes the patterns hard to see. But anyway, so Redbox is obviously following that trend line nicely. I entered this trade after I waited for this explosive candle here. I waited for the retest of the level to act as support like he was talking about. And then as soon as the next candle opened, I was in. And I took that for a ride. All just within 2 candles, I hit 50, 60% on this trade. And then I sold that position. I waited for another retest. And then that's whenever I picked up my calls to swing. Because obviously this was going to be a nice support level now. And I even told everybody my price target was 850 today. Auto button far right. Well, that's like up and down, right? Yeah, I don't know. So I swung this call position into tomorrow. And then in the after hours, I don't know why TradingView only goes so far in the after hours, but it was squeezing today. Let me see if I can stop sharing and share my Webull screen. That may be better. Let's do this. There we go. All right, cool. Hey, if y'all want to talk or anything, this is not like I'm not doing some formal thing today. It's just charting. So, yeah, this is much better for explaining stuff. For now. So whenever I'm in the middle of my trading day, I usually have the 1 and the 5 minute up, and then the 10 minute in the background, just to confirm my view on it. Yeah, this is a nice after hours volume on Redbox today, guys. This could easily squeeze the next day or so. Memes are looking hot. AMC, GME, those guys. So you'll see that I'll draw a wedge or trend lines intraday. Let's see if I can do this. Good. Oops, the 1 minute here. And then this I'll put is the 5 minute. Okay, very good. All right. Yeah, this is the 5 minute chart, and then this is the 1 minute chart. On my 1 minute chart, if you're asking about volume, this is the support resistance level. That's what the golden lines are there. But these golden lines are my levels that I pull from the daily chart. I also do not listen to these gurus that go off the last few days or the 5 minute chart or whatever. Screw that. That's not my trade. I'll take the daily levels any day of the week. I mean, because there's a reason for that, right? Because almost always on the first tap of a daily level, you'll get rejected. It's very rare, unless the market conditions are just right. It's very rare that when something comes up and hits a daily level, that it just blasts right through it the first go. So if I'm going to play calls and puts, and I'm going to scalp this, right? So I'll play the rip, hit my level here, sell for a profit, hit some puts, and then that one candle, you could probably take that for 20, 30% plus. And then you come back down, test this other level, sell for profit. You know, once it confirms the support again, you know, like this is not, it doesn't have to be complicated, you know? I don't know why people feel the need to have all these crazy ass oscillators and all that stuff. There's just no need. But if you were going to play the EMAs on this, right? Technically speaking, you could have entered this trade a lot earlier. But because I know that there's a daily level, if I wanted to play the EMA strategy and it's crossing above VWAP and all my EMAs are in order, like, okay, that's some people's confidence, not mine. Because I don't want to have to micromanage this trade. So I'm not, if it's only like from 717 to 740, that's a 20, 30 cent move. Like, I don't care about that entry. I'm going to wait for that first rejection of that daily level, see it get rejected, and then use the EMA as support and then blast through that level. And then, so even now, during this point, I scalped the initial breakout for scalp, like on the way up. And then as soon as it hit hesitation, I got out. So this is what I was talking about here. I scalped this candle here with the volume at the bottom. See that nice volume on this candle on the 1 minute chart. I played this up as soon as it hesitated. I mean, as soon as it stopped, boom, I'm out. And now I'm gonna wait for one of my real trade. So I scalped the initial, I usually scalp the initial breakout of my level and then I'll wait for the retest to get into a trade with size. And a scalp for me is typically always smaller size because I'm not trying to gamble. So you get your retest one candle later. Yeah, let's see. That's the time period. Yeah, so it broke out here. You get your retest. The EMA is acting as support here. The very next candle opens and you're off to the races. So listen, I'm out, and then 34 minutes later. So I got my candle close above that line. And then I'm waiting for a confirmation candle. So this on the 5 minute, I closed above my line. I'm gonna let this candle play out all the way. Let that 5 minute candle go all the way. And as soon as it held its support and the next one opens above my level, I'm in, which is what happened, right? As soon as it, each one of these is 1 minute. These are 5 minute candles. So now I'm into this trade. And my next price target, because I already have it drawn out, I had a plan coming into this trade. I took it to $8. I got out. I held my common. I'm still up 22%. And then, okay, so I'm out now. I got rejected. Like I said, first time hitting a daily level, I get rejected. That's my price target. Well, now that I know that this stock has strength and it's getting volume today, and it's acting differently than SPY is, and usually when something deviates from SPY, it's a pretty decent day trade. And then, so, okay, I'm watching this play out. It's the top and range bound right here. And then once again, it comes back down and tests that level of support again, which is what happened here, right? Well, now I'm seeing that it bouncing off VWAP. I see this level holding. Okay, well, this is obviously now a nice support zone. It's not breaking down. Nice long wicks on the bottom. This doji candle kind of fucked me up because that shows indecision. But as soon as it opened up higher, I kind of knew, like, I went in. But you just got to be careful in this market. Like, guarantee yourself profits. Be greedy. There's no point in gambling. You know what I mean? Okay, so then the trading day keeps going, and I see the volume starting to pick up. And I was talking about this live on Zoom earlier today. So now all of a sudden, each candle is having higher relative volume. We're starting to get into that last hour of the day mark. After 1 o'clock Central, the volume typically will start to pick back up, and that's kind of what happened here today. And so I started drawing these trend lines, right? Like, okay, let me see what it's respecting, because I need to see a breakout of this trend before. I mean, cause at any point in time, a meme stock get rug pulled, right? Like, they could just dump on you. And you start to see these massive volume candles coming in on the 1 minute, and they're like, okay, there's a tension here. Bulls and bears are fighting it out, right? And sure enough, we get to the next level. Here's the $8 level. Well, now here's another. If you're not already in the trade, well, you already have this drawn out. So I'll play the initial rip, scalp, scalp, scalp. And as soon as it hesitates, I'm out. And then I'll wait for the retest. And sure enough, it came back down, not all the way, but it was there. You could have played that break, right? And then as the day's going on, you start to see where candle bodies and wicks are just kind of touching a certain area. So I'll draw an intraday line. Well, that was that. And like, this is a good example of the wicks instead of the bodies, right? Wicked up. And the battering ram setup is a pretty simple trade. So you'll have usually 3 to 5 tests of a level before it breaks out. So let's see it. Let's see what this count is. 1, 2, 3, 4, 5. Boom. And it broke out. It hit my price target at 850 today. So, like, this is an absolute textbook setup for me today, personally. The battering ram is one of my favorites, but in order to get a breakout on a battering ram type setup, it has to be with volume. That's why volume to me is important. Like, you can play the trend lines, you can play, fibs and everything else, but if you're not getting volume, it's like, like, it's not SPY. SPY will have a low volume melt up every day of the freaking week. with individual tickers that are hitting key daily levels, trying to break out. I mean, this thing ran freaking 27, 28% today. That's not normal, you know? That means shorts recovering. Just this thing's squeezing a little bit. This is not, you know, typical price action. And then I held this into the after hours, and as you can see, we had some big volume coming in after hours. And it ripped all the way to 945, which is awesome. My next price target on this is going to be 930, 930, 935-ish. So I can just draw that on here. Yeah, it's coming right now. My daily levels are always gold. My intraday levels are always like something light and blue. And then I'll probably take these lines off once I see a different move. What do we got? Yeah, yes, exactly. So for anybody that plays, I don't know if y'all play waves or not, but typically you'll have 4 to 5 waves in a move before you get your move, your real move. Anybody have any questions so far? Does that sound pretty? I mean, it's pretty simple, right? I mean, I don't understand why people have to make this setting difficult. When you're charting out the stock, as long as you know how typical patterns would play, like on a battering ram setup like this, or even the one I took down here. Look, I'll turn this extended hours off and you can really see it. Check it out. So going into the trading day, hit, this second hit, third hit, fourth hit, broke. So I took this from $7.40 to $8, took profits there, and then I took profits again at $8.50. All right, well, now that we broke out, let's see. Okay, so you go up, hit your level. Now it depends on how bullish are you. You know, like I can told you I'm greedy. I don't mess around in this market. So I got completely out of that position on the first run. And then I wanted to wait and see what it was going to do later in the day during lunch. I don't really like messing around trading during lunch because the volume dries up. So, but you can see anytime, let's see here, the lowest point of the day is usually a moment of trend change. So the volume is super dry down here, right in the middle of a lunch day, right? Well, you're getting your downward trend. Well, then the volume started picking back up. This is it's the moment of truth. You had a downside battering ram setup deforming here, 1, 2, 3, and it was moment of truth to see if this was going to hold its support. And sure enough, the volume started pouring back in, and it ripped to the level that I was waiting on at 740. Well, it hit 736, but close enough, right? And then, so now I know that it doesn't want to go down. It wants to go up. The bulls are taking over. And so you had multiple opportunities to trade this if you were utilizing volume and just levels. I mean, you didn't have to really work that hard. It's pretty textbook. But I know a lot of people make things complicated, and I know they like to use all kinds of different fancy stuff. I'm just so basic, man. Like, and I've had a lot of success using this strategy in the market we're in. I mean, when SPY is trading, you know, $12, $13 in one day range, I don't want to take any chances. This strategy for me in particular is a lot more guaranteed profit. I'm not the guy that's going to go from 100% to having a trade go red. I'm not that dude. No way. Like, to me, those guys are wild. They're absolutely wild. What do you got? Anybody got any questions? Steve, I did both. That's what I was trying to say. I'm still holding my commons. I'm up 22% right now. I took them at 740 and rode them to the 850 mark. And I did take profits at 850, but I still have some. And then I played the initial breakout with calls. And then as soon as I reclaimed support here at 740 again, I wrote it up. I'm in $10 calls right now. Yeah, of course, man. Any other, I mean, if y'all have tickers you want to chart, we can run it, man. Like I wasn't trying to just like talk the whole time, you know what I'm saying? Like, this is more of a conversation. So let's see. That's a good question. So I mean, I am online. I'm online all day. I'm not gonna lie, but I'm not trading all day. I typically my market over here opens at 8:30. I usually trade till about 10:30 max. So 10:30, 11 o'clock. So like this window. But obviously this was like right after that. But I hopped on live thinking, okay, we're in the lunchtime, the volume's gonna be dead. What can we talk about? I wanted to just like have a conversation with people. I am not the dude that does alerts. I am not the dude that is gonna like tell you what to do. And for damn sure not the dude that's just gonna like listen to people beg him for shit. Like I would much rather chat with you, find out what you know. Let's talk. I like to keep it private and and I'll post this recording later for everybody to see. But Spy from the Daily. Spy was a cool chart too. I was playing that all day today. So check this out. I had a money ass trade on Spy. Yeah, man. What do you wanna unmute? Chat with you a little bit.
Got it. Can you hear me?
Somebody. Yeah.
What's going on, guys?
Oh yeah, no, you can have your price alerts, sure, but I'm online all day, man. Like I have my favorites that I watch. Especially with options trading, you gotta find stuff that has liquidity. It's really important. Like Redbox is not a typical options play. It would just so happen to getting volume today. And I will tell you that the $10 calls, I mean, the open interest at the beginning of the day was like 300 or some shit. And then I think there was like almost 3,000 opening trades today on it. So it did provide a nice profit taking point. But I'm not gonna lie to you, like this is not a typical options trade. With these small names like this, I'll play commons on it because even though you might have a trend, the options chain is just not liquid enough. So you might get lucky every now and then, but you'll watch your premiums burn most of the time on small names. Well, yeah, just describe the scalp on this one. That's what I'm saying. Like if you're playing a small name, if it's getting volume that day, you're taking a risk because it could get rug pulled at any moment. Like these meme stocks, like this is like I think 150 or 170% shorted, something crazy like that. But it's getting a lot of sentiment on Twitter. The market is sentiment based right now. So I like to watch what's popular. I like to watch what people are talking about. I have no problem taking advantage of the meme stock people. Like y'all gonna run it up and talk about it? Let's talk about it. I'll take your money. It's fine. Buy my calls. No offense to anybody, but whatever. Okay. So you want to look at Spy? So what do you think, man? Like you think this is a decent strategy? I haven't really gotten your opinion, I guess.
Yeah,
Man,
I mean,
dude, if it works, it works.
Yeah, right.
Like that's all that matters.
Yeah.
That's really all that matters. Your strategy, I see a lot of people do it, like just like the general strategy or system that you have. Obviously, the way you like
Right.
read the price action is going to be different than everyone else.
Right.
But no, it totally works, man. You're essentially running like a modified not even modified, like kind of supply demand type trading style with like breakout plays.
Yeah, I mean, exactly. Like I don't necessarily have the terminology that what you're gonna find on Twitter and stuff. I'm really simple. I don't see the need, especially since the people that I teach and the people that I work with are so new to trading. There's no sense in using really, fancy terminology or like you'll see a lot of people's charts. Oh my God, you should see our alumni chat sometimes. These guys, it is insane what we see on there. Yeah.
Yeah, I think that the problem a lot of people have is they kind of skip over the fundamentals of what's happening,
Yeah.
because there are things like they I don't know, they don't really take the time out to think about the market their own way and like fully digest or understand what's going on is kind of the main issue.
Right.
Because there's things like, for example, especially when we talk indicators. I swap out a lot of indicators here and there. I'll use things like RSI, OBV, whatever.
Oh yeah.
And they're all just different ways of getting different data points. But the problem that people run into is they'll just start chucking indicators on. They don't know what it's actually telling you, right? Because, for example, like RSI is a momentum indicator, and most people know of it as just all right, when it's over that line, it's overbought, so you buy puts, and then below it, it's oversold, so you buy calls. That's not really what it is. Like, to a certain extent, it is, but it's kind of showing the momentum for the previous set time periods, right? And all these things can be useful. It's just that people don't really understand what they do or like how they're calculated, and then they can't really fully translate that into their trading because they also kind of just skipped over how price action works and the real basis like support resistance, and just jumped right into, I'm just going to use this indicator as just kind of like a hard mechanical signal, which is where a lot of people fail.
Yeah, I totally agree with that. A big part of that too, is people using like indicators that are telling the same story. Like they use
Yeah.
it as a layer of confidence or whatever. Like, oh, at this indicator, I have 3 or 4 different things that are telling me to enter this trade. Well, no, you don't. You have the same fucking thing, just saying it differently. So when you start, it's not all indicators are created equal, and just because there's more than one indicator out there doesn't mean it's not saying the same type of thing. Um, if you want to really use indicators, you have to have a diversified group of indicators that all say something different that will give you more confidence and add to your confidence level, right?
Yeah, like how I compare it is honestly, like I don't want to go back to the stupid example, but like you got your lemonade stand, right? You
Yeah.
can, to predict how much sales you're going to have, like how much lemonade you need to make, you can look at a whole bunch of different things, right? You can look at the weather forecast, you can look at your average customers by day, if it's a weekend or weekday. You can look at your standard deviation of customers, like the max customers you get some days versus the minimum. And that kind of information is like indicators, right? Where your Bollinger Bands, for example, is looking at 2 standard deviations away from the moving average. So some people, if it fits their trading style and the way they interpret, the chart, it can work 100% with them. Some people like moving averages if it works with them. RSI can certainly be helpful. Like I like RSI to just kind of see how the trend is doing, if the trend is slowing down with momentum or picking up pace. Um, MACD is almost like a final trend confirmation signal because it lags so bad. So like, a lot of indicators, they just give you different pieces of information. So people just need to know like what it's actually giving them and how it fits into how they trade, because then they'll be able to find out, okay, maybe RSI is actually helpful for me because I do really like doing momentum trading. And I could watch as, the RSI ticks down, even if it's, like still high, even if it's ticking down, it's still a positive momentum as long as it's above the midline, right? A
Right.
lot of people don't get that. So they just got to understand like what information they're getting out of it and then how to apply it to their trading, which
Sure.
is, it's a huge issue that a lot of people have.
Well, and and not being well researched, you start getting into the markets and you think it's fun, like it's a freaking video game.
Yeah.
Like, dude, I've seen so many people blow up their accounts because they don't understand the validity of what they're doing. Like, when you start off with 50 grand and you're down 10 grand 6 months into the year, that's not good. Like, maybe you should stop.
I mean, I think I speak for most of us when I say that
Uh,
we've
I've done it
definitely blown
too.
up accounts.
Hell yeah, man.
Oh
I think I
man.
told you at the beginning of boot camp, I had 50 grand, right? And I had never traded options before in my life.
Oh boy.
And I took my first options trade, and within the first 2 weeks of camp, I was down 50% on my portfolio.
Oh,
And
oof.
I stopped everything. I was just like, all right, no, this cannot continue, or I'm going to be broke.
Yeah, man,
Uh,
dude, everyone hits that point. That's how it happens.
like, so I went and bought some books. I bought Trading in the Zone. I got, Technical Analysis of Financial Markets, Sean T. Murphy. And I really, really started to break down what I was doing because it never failed. Like, I'm a good trader. Like, I know, what I'm doing, and I would be off by like a few days because I was playing options now. And I would get roasted, or maybe I was off by a week. I just timed it off wrong. And timing is everything when it comes to options. You got to have a good entry. You got to, play the volatility. Just because your overall thesis is correct, you still get beat down 100% on your play in a heartbeat.
Yeah, it's hard, man. That's why you'll hear all those guys like, try and watch everyone talk about having an edge. And
Mhm.
like the one thing, I never did for the longest time. And most people don't do because it's a pain in the ass, but the trade log is just so important because
Oh yeah.
what you're essentially doing is you get yourself a chance to review what you did wrong, like really dive into it. Because when people say you have to put in work and a lot of work, people put in a lot of work. Like I used to just look at charts, but I never really, I don't know, did like deep thinking about it. Um, and it's a lot harder, than just kind of looking at it at a glance and interpreting it. But your trade log is going to tell you, like, if you trade a certain system that you have, where, for example, Alan is looking at, all right, I'm playing off of support bounces, plus EMA bounce, and then I see like momentum go up with a certain volume amount. He essentially has a system that he set up himself where he has certain criteria that has to be triggered, and then he says, okay, I think this looks good, I'm going to enter the trade, and he follows this criteria every time, right? So what you're going to do with this is, as you log your trades, you can get your win rate of your system. And that's super important because if you find out your win rate is like 30% and your winners only go, maybe 120%, but you keep losing 50% every, on your bad trades, now you're in a losing system, right? Because some people, they can have a 30% win rate, but if their system sets them up to get like their wins are like 800% or something, and their losers or stop losses at minus 40%, they can still come out profitable.
Money Manager is a perfect example.
Mander.
Yeah.
Mander.
Yeah, Mander, this 45% win rate
Yeah.
and making 20 grand a week or whatever it is.
Dude, I know people with worse win rates that, they'll just their system sets them up for like go big or go home, right? And as long as you know that, you can set up like a proper stop loss and let your system win, right? So it's also, setting it up will make you realize that most people don't actually have a system, even though they think they do in their head.
Yep,
So
I agree with
that's
that.
the biggest thing. It's a pain, but if you're not doing it, you're not going to win.
Well, yeah, and then at that point, you start to realize the longer you trade. I know that's what I had to figure out too. Was I could be posting these freaking Weeble cards all day, but if that position I only put 1,000 in, and then my losers I got 10 grand in them, like you're
Yeah.
gonna slowly but surely bleed. I mean, I'm not even like feeling called out. Yeah, well, fuck. Like, yeah, we all had to learn that shit. So one of the most important things in trading, in my opinion, is it's not picking the winners. It's not losing big on the losers.
Yeah.
I mean, that's just so damn important.
And understanding why you lost.
Yeah.
Like that.
So
Exactly.
Yeah,
like
that's
one
the
of the
log.
things I like to do is I'll get on TradingView and I'll put big ass circles. Okay, I entered here, and I'll list out the reasons why I entered, and then I'll put on here I'll exit here, and then I'll if I got burned, I want to know why I got burned. And honestly, if you're still making the same mistakes over and over and over, then maybe you don't understand why you're losing. Like, because that's another thing is like, you might think you're losing for a certain reason, so you change that. But when really it's because you didn't zoom out, like, right? Like, oh, like, what if I entered this trade here and I didn't see this over here? Like, well, I didn't zoom out far enough. Sometimes you got to look at the 1 hour, look at the 30-minute chart, get a better idea of what the chart's telling you, Like to me right now, like SPY is flagging like a motherfucker. I see downside in the morning, right? Like that's why I'm swinging puts in tomorrow. I also see a firm rejection of the 416 area, but also I could be wrong because it could be another situation where you hit 1, 2, 3, 4, and we have a breakout tomorrow and we go to the next level. So, it all depends on what you think, but I don't see anything telling me that SPY should rip. I mean, I think later this week too, when CPI comes out and FOMC talks and all that stuff, I have a gut feeling that we see more downside. But the truth be told is like whenever you're trading, it's it takes more than just looking at patterns. It takes more than looking at candlesticks. It's like look at the news, look at the macro level stuff. Like what's moving the market, why, right? Like is Bitcoin ripping? So therefore, the Bitcoin related names are ripping, and how are they related to it? Like it's a whole mentality. And it does take a lot of research and a lot of training to understand macro level principles in the market. I'm not saying to give yourself a bias based off of that, but if you're especially like a swing trader or you think something about something, I encourage you to have more conversations like we do in our alumni chat. Like every day, we're talking in the morning. You can ask Woody. I don't know if Paul's on here, but we sit here and talk macro level concepts. Like, what's going on in the world? Let's talk about it because it's going to change your mentality big time. And if you think a low volume melt up is typical, it's not. But SPY does it all the time. Like it's freaking bottoming out volume. I mean, just look at the daily. You see this volume coming down and SPY coming back up here? To me, that's typical sign of divergence. And if we don't get some major volume soon, I do not see this ripping. I mean, there's a lot of people calling for 430 on SPY right now, and I just cannot justify that belief until this here. I can't justify that one until we break overhead resistance. We got the 50 up above us still that we have not broken on the daily, like we talked about earlier. It's this straight up flatline consolidation period in SPY. Now, some people could say it could be a cup and handle forming here, double bottom, and then a consolidation before the rip. It's possible. Yeah, sure. But I don't go into a trading day with any bias. I take what the chart gives me. And rather right now, the chart is telling me that we will have a big move soon because this is the lowest volume day of the year. But it may not be the move people are hoping for. I just don't, unless some serious freaking news comes out pushing us higher. I mean, to me, it's just gonna be a fake out. So we'll see what the chart gives, but I'm not gonna be biased at all. I'm gonna let it play out.
I think one of the things I've learned is have an exit strategy. And I probably, when I look back, especially in the boot camp days, I know Alan and I were in the first boot camp, and I entered on signals, but frankly, I didn't have an exit strategy. Even if I said I'm going to do a 20% stop loss, I did not have one. I was trying to pay too much attention to the chart and the signals. And now what I do is, and it's really helped me, is in addition to a stop loss, I also look at a price target or a level, as you've indicated, Alan, many a times. Levels have definitely played a bigger role.
We were in the King Capital Boot Camp. That's where Soy was a founder. Soy Boy was the founder of it. So yes, absolutely. So I think there's a big misconception that people feel like they have to constantly be trading. Let me tell you that the really, really good traders, the ones that have lasted in this market over the years, they take maybe 1 to 3 trades a day. Like the rest of it is just scalps. Like, so like me, like I told you, I like to play the initial breakout about a level. What that means to me is the first time it breaks off that level, it rips. First time it rips off of it, I'm scalping it, meaning I take it for very, very quick profits, usually less than a minute or two. That's it. Okay. But as far as taking a nice trade, like a real solid size one, you have to understand the charting. Like we have to understand the patterns, right? So if you look at it carefully, you can almost see it here. You need a cup and handle, and then a rip off that 740 level. So that was actually a perfect technical trade too. And the further you're out using them out, the better you can see it. Cup, handle, boom, rip. Or you could look at it a different way. Inverse head and shoulders, invalidated, right? So I highly encourage people to look at, read up on technical analysis. I'm happy to provide any sort of resource people want for books, but this takes a lot of dedication, takes a lot of work. I have probably 18 hours a day of screen time. Like I'm not joking. I trade full time every day. I'm working with people every day, constantly doing these Zoom calls. And just to let everybody know, I did commit to teach for free until the end of the year, at which point I will be starting my own business outside of Twitter. It's going to be more in person and more personal, just more my style. I have no interest in doing internet revenue. I mean, I like spreading information and positivity and pumping up other traders that are badass. But I mean, that's not my space. I prefer to talk to people and have conversations. And if you ever pop into our live call every day, you're more than welcome to. It's all good. But hey, guys, I think like this is a pretty good hour here. I think I'm gonna go ahead and call it. So, boy, thanks again, man, for coming. I'm gonna post this recording later. Hopefully, somebody gets something out of it. But y'all definitely listen to this guy. He knows his stuff really, really well. He does his thing. And you know, if y'all ever want to trade with me, you want to talk, you want to learn something, ask questions, don't be afraid to, man. Like this is definitely a safe space for learning. All of us have started off somewhere. I mean, I started with $500, you know, so it's not like, you know, not everybody starts with 100 grand after a lifetime career in something else, trying to learn how to trade. And 90% of the time, the more money you start with, the more money you lose in the first 6 months to, you know. So it's actually better to be compounding from a smaller account, because some people with 100 grand or more will win, you know, $10,000 in 5 minutes, and then the next day they lose 30 grand that whole day. So it happens all the time. But yeah, I appreciate you guys tuning in. So thanks again, man. That was pretty cool.
No worries, man. Appreciate it.
All right. I'm gonna get some
Thanks,
rest.
guys.
I'm gonna be on early in the pre-market tomorrow, guys. If anybody wants to hang out, I'll post the Zoom link on Twitter probably an hour to 2 hours before the market opens. So yeah, y'all have a good night, guys. I appreciate it.
Take
Have
it
a good
easy,
one.
guys.